Hey, welcome back. I'm recording this around 11 a.m. Pacific time, so there's still about 2 hours left in the trading day. But at this point, we can see the shape of the session pretty clearly. SPY, QQQ, and DIA are modestly green, IWM is lagging, and TLT is basically flat to slightly lower. So this is not a broad risk on melts up, but it's not a panic tape either. The clean read is that mega cap tech and AI infrastructure are still catching a bid. Small caps are not confirming the move, and the market is staying surprisingly resilient, even with the Iran risk still in the background. Feel free to jump ahead using the YouTube chapter markers. And quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more. And thank you so much to everybody who's already subscribed. The sector tape is selective today, not broad. Tech and communication services are doing most of the work. Industrials are quietly constructive, but healthcare is weak and energy is not leading, even though geopolitical risk is still elevated. That matters because if this were a true Iran panic tape, I would expect oil, energy, defensives, and bonds to dominate the conversation. Instead, the market is still rewarding the AI platform trade, but in a more selective way. Meta is getting rewarded for a better AI Capex story. SMH is being helped by the SK Hynix memory narrative, while weaker software and healthcare names still need their own catalysts. Macro is basically giving the market just enough room to hold up. Oil is lower today on hopes that shipping through the Strait of Hormuz can normalize, even though crude is still up for the week and the Iran situation is not resolved, although we are getting a ton of headlines about potential progress and prospective meetings. That is the key macro point. Geopolitical risk is still present, but oil is not confirming a full inflation shock today. Yields are still the bigger risk for long-duration growth stocks, but with TLT not breaking down aggressively, the market is willing to keep bidding parts of tech. So the macro message is mixed but not toxic. Watch oil, watch yields, and watch whether next week's inflation and earnings data either confirm this bounce or turn it into another fade. The first news story is Meta, and today's move is important because this is exactly what a sentiment repair trade looks like. I don't think the driver is just they have a new model. The cleaner story is that Meta may be able to justify its AI capex through custom chip design, more efficient infrastructure, and potentially renting out excess compute. Second story is Microsoft, where the Starbucks headline still matters because it hits the software bear case directly. If large enterprises can use AI to build internal tools that replace pieces of Microsoft or IBM software, the market starts questioning which software revenues are actually defensible. The third story is SMH, where SK Hynix's US debut and the HBM memory demand narrative are keeping semiconductor sentiment strong, even though this is also where I'd be careful about crowdedness. And the fourth story is Oracle, which is weaker after it received an S&P credit downgrade. And that's a different flavor of the same AI infrastructure debate. Growth is exciting, but Capex, debt, and free cash flow still matter. But at the same time today, we actually got a headline today that the UK government has designated 4 major cloud services and technology providers as critical third parties, one of which is Oracle. Now let's look at the market forecast using SPY as a proxy. And like in every video, I have the monthly, the weekly, and the daily right here to show some specific levels. And not much has changed on the monthly. The SMA stack is still intact and we're above it. That's the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average, meaning that they're in order. The 20 is above the 50, which is above the 200. That's bullish. And you can see we're in a super uptrend right now. The weekly is the same. It's very constructive. However, I mentioned this yesterday that we're getting historically elevated from the 200 simple moving average, meaning the percentage away from that. And you could see that started happening really aggressively in 2024 there. And ever since we've become further and further away. So the pullbacks, in my opinion, could become deeper and deeper, even though my base case for a pullback, and I'll show you on the daily, is actually starting to come around 695, 700, something like that. So if we look at it on the daily here, it's also constructive, even though we are technically in a downtrend on the super trend. It remains constructive as long as price doesn't lose the recent range. The key support is roughly the 748 to 750 zone from today's intraday low and round number breakout area, while the key resistance is around 745 to 755, where the market's been pressing into the highs. And the setup is constructive though, but not clean enough to chase blindly for me. And I've been mentioning this in a few videos. I'm not adding to my long-term holdings at this point into my ETFs that track SPY. But basically, because small caps are lagging and the market is still very headline sensitive into Iran, inflation, and earnings, I don't want to blindly be chasing it here, especially because I think the downside is probably greater than the upside at this particular point in the market, especially as I've said, how far away we're getting from some of our moving averages. But to be honest, with speaking about moving averages, I'm watching this 200 simple moving average on the daily here. I want to see this catch up with the previous breakout. And we mentioned over here, it's a lot easier to see it actually on the weekly. This previous breakout that we had, which was right around 695, a lot of people will have the psychological level of 700, but I could see down here at 695, we have some really great levels, confluence of levels forming right there. And the 200 simple moving average is right around that level there. I'm not saying it's going to stay at that level by the time we pull back. And I just think we'll probably overshoot when we do pull back. So that's something I'm watching very closely. I also mentioned that there was a lot of dark pool activity at 750, as well as a lot of positive GEX building up at that. So we need to break above it with strength. And then, like I'm always saying, we need to not only break it above with strength, then we need to see a red day, meaning that they're selling above that level, followed by a green day or a lot of buying coming in after that selling to say, hey, it held even once we've started to have some exchange of shares above that price point, essentially acceptance. So that's what I'm waiting to see. And for me, that would require us essentially to break the 760 to come back down to 754, 752, 750 even, and then continue back upward. So you can see how it's not the best risk adjusted play for me to be playing the index directly at this point. So now let's jump into some specific trades. All right, so let's talk about Pfizer. Feel free to jump ahead if this isn't for you, but I did a video recently talking about why I'm building a large position in Pfizer for 2027. I'll leave a link to that video if you want to learn more about it. But essentially, fundamentally, Pfizer is not a high growth compounder right now. It's more of a post-COVID value repair story with a low valuation, cost-cutting, pipeline optionality, and AI as a potential future catalyst. Sentiment is still hated and contrarian, not leadership, which is exactly why this setup has become interesting to me. And so let's jump into the charts here because there's a lot going on. First, news-wise, there was a big story today about them essentially winning a patent issue, a patent dispute between Pfizer and AstraZeneca. So that was really great. And if you just look at the news that's going on today, there's all kinds of other things going on, winning FDA approvals for things. What I also like to see is that B of A is lowering the price at the same day. There's a lot of positive news. That always, to me, is a really great contrarian signal. And then so I start to look at other things. And the first thing I look at, and you guys know me, is time and sales. And so I saw that I had to take a screenshot of it because the way Thinkorswim does it, it doesn't keep all the time and sales there. But tons of inflows today going in. You know, these are 66,694 shares coming in. And I'm just filtering for large shares. And those are on dark pools. So you wouldn't see that unless you're looking at the time and sales. It does show up in the volume eventually, but that I just saw a ton of this at the same time I was seeing all of the news stories coming. But I mentioned this essentially a day or two ago because I started to see bullish RSI divergence, and we talk about this a lot in a lot of videos, and particularly bullish RSI divergence that corresponds with oversold on the RSI. So right here we have a low, and then here we have a lower low to this body or to this wick, however you want to do it. RSI is rising, and you could also do it from maybe from this day to that day too. So it showed up on my radar. Plus we're consolidating around there. And I also have this fib drawn on there because I've been trading this for previous years. I think this one my fib might actually even be from 2024, or 2025 in April. And so we're consolidating around the 618 level, which I really like. So to me, this looks like a really long-term turnaround story for me. But I just wanted to flag it today because those inflows on the time and sales were really, really interesting to me, combined with the fact that we were getting all of this news. So I just wanted to cover this one briefly. So Meta doesn't really need much introduction here. We've been following this on the channel very closely, and today was a huge day. We're up 5.75% with the highs of 677. So not only did we have a massive day yesterday, but if you were following the channel, I had shown you where a lot of the GEX was at 625. And when we broke that with strength, I think it was no surprise that we came up to 650, which we had said was the next level on the GEX that we'd be looking for. In fact, I'd be looking for some type of pullback to 650 before I get back in. And if we look at the pivot points for tomorrow, or actually Monday, I suppose, you could see that we have one here down at 627 and one at 650. So I wouldn't be surprised if we visit S1 right here sometime into the open. But I've been playing this in a number of different accounts. I had 140 shares in my long term. I closed 40 of those right now because of pop like this. I like to take my profits in general. I also had a lot of long calls and I took profits on those, but I'm still holding a number of shares here. And I'll be getting back in essentially if we come back down to 620. 625. I want to see a gap like that filled. I don't know that it will happen given what's been going on, but if you look at what's corresponding with, this is the 200 simple moving average right here. I wouldn't be surprised if we come back down to the 635. 625 would actually correspond with this trend line on the daily. So that's not uncommon. It's going to shake a lot of people out who are getting in aggressively right here. We definitely still have room to run on the RSI. So I'm not sure it's going to happen immediately, but I made a lot of profits on this. We've been playing this for quite a while. So I'm good at the moment there. I just wanted to cover this because there was a whole lot of sentiment turnaround right here. Like I said, this is exactly what it looks like when you have a sentiment recovery. It's clearly repairing today because the market's finally has a better story for the AI Capex custom chips, infrastructure control, and potential monetizing excess compute. And so today's news is that narrative shift, essentially, and yesterday's news, I suppose. Investors are treating Meta's AI spend less like a black hole and more like something that could eventually become a revenue stream. So not a lot to say there, except congratulations to everybody who's been building this and not listening to the narrative there before and just following the fundamentals and the technicals. I mean, that's what the game is here, to find the mismatch between the sentiment, the fundamentals, and the technicals. All right, so let's look at Microsoft. And if you didn't see the video yesterday, just cover the fundamentals real quick again, at least just one sentence there, which is that Microsoft is still one of the best businesses in the world. I do believe that. And with Azure, enterprise distribution, GitHub security, and OpenAI exposure, and the valuation looks reasonable for the quality you're getting, I'm still highly invested in this. In fact, I've taken some of my Amazon profits and put it towards Microsoft here. Because the problem, as I just mentioned previously, and what the opportunity is that sentiment is the problem. The stock is still trading like a laggard because the market does not have a clean story for why AI strengthens Microsoft's moat instead of just raising Capex and software substitution risk. So today's relevant news remains that Starbucks stories from yesterday, and also what's going on in semis. Essentially, these are the people footing the bill for all of the memory and all of the chips. And so they're getting beaten down there. However, all I'm seeing is continued consolidation above a double bottom or a liquidity sweep low right here. And we mentioned some of the RSI divergence. I'm on the 4-hour, obviously, but you see, I think this was drawn on the daily here. When you see that type, yeah, exactly. When we see this type of bullish RSI divergence, it doesn't mean that we're going to go to the sky immediately, but it does say that I like the risk adjusted or risk reward, risk adjusted returns. Obviously, I'm speculating the returns here, but this is a nice profile for me. Asymmetric upside is what I'm looking at. It's also held above these previous fibs, came back down, tested it, popped back out. So now I'll be looking at my next fib set over there. And this was also the 78.6 fib from this previous low right here. And we're holding that nicely. So I really do like to see that. However, I will say we're in this consolidation zone right now here. So this is going to take a little more time to play out, but I do think this one's going to catch a few people off guard. However, Microsoft does this from time to time over the course of a year where people get very frustrated by the price action, then all of a sudden it recovers. And as you saw with Meta, all we need is a sentiment shift. And then fundamentally, all we need is them to provide better numbers with Azure. And I'm talking about a very small increase in some of their metrics. So this is one I'm watching. It's not a dead story today, but like most of software, I'm not going to cover all of those names today, but IGV kind of mirrors it very closely. And if we look at ServiceNow, it's a very similar story there, or CRM, which we've been following, Salesforce, very similar story. So those are all kind of following that pattern for me, but I'm watching them very closely. I'm going to do a special one again. Every once in a while, I try to throw you guys a weird one. And this is Xylem. And fundamentally, Xylem is a high quality water infrastructure company, but it's also largely a software company too. They do tech for it, but it's not cheap. So the market needs to believe in steady revenue growth, margin execution, and long-term water demand. And I think the water demand is there, and people are starting to realize that. I have a large portfolio in water plays, and we could talk about that. You guys leave a comment. Let me know if you'd like me to do that. This is just one of them, and it's a leverage play. I have a few calls on Xylem. Oh, you can also see some of my other water plays there. Sorry. In this account, there they are. This is a large portfolio. I have 2 call options there, and they're for December. But essentially, we're starting to see a nice little breakout here. You can see on the daily, we broke above this descending trend line here from the peaks of these. These look like Elliott waves to me. If you guys are familiar with this, we have this first impulse down, recovery, impulse down, recovery, impulse down, and now we're starting this recovery. Plus, we broke the trend. So I like that. The only thing to be careful about is that that we have earnings in 17 days. So I'm watching that very closely. However, these are long-term calls for me, so I'm a little less concerned about it. I'm actually going to be watch the numbers. And what I love about long-term calls like that is I'm okay with the risk that I've taken on. I can lose this investment because I've calculated it as a portion of my portfolio. I don't want to lose that investment, and I doubt I will lose the whole value of the call. And I may start to hedge it as we get a little bit closer, or start to take some profits. But I'm watching it very closely here because I like it. And there has been a little bit of a recent catalyst in this, and it's that Jefferies upgraded it and the expanded Dow Water partnership. And today's strength suggests investors are starting to pay attention to the infrastructure angle. So I like this one a lot, and it has a lot of room to grow. The ATR isn't crazy. It's 2.8. So for every day, it moves roughly $2.88, which is enough for me for 2 call options with, I don't know what my delta is currently at this. Sorry about that. It's 42. So I am holding 84, essentially delta. It's like having 84 shares, but of course that is going to expand. I'm only paying 3 cents in theta per day, but on 2 of them, so it's 6 cents a day. So I like this trade in general. And let me know if you guys want me to go over how I purchase call options, how I structure my options. It's not always call options. Oftentimes it's spreads. Other times it's cash secured puts. Sometimes it's multi-leg strategies that go well beyond that. Ratio, spreads, that kind of thing. So let me know if you want to cover it, but I've been liking this name. I do think that there's still more room to run. So I just wanted to bring that to you guys. Not financial advice, of course, just how I'm looking at the markets and investing in my own book. All right, so the next one to talk about is Oracle, and it's a really beaten down stock. Sentiment is terrible, but I got a lot of good signals on it today. So let me show you a custom program that I use to scan for some things. I know you guys like some of my custom tech, but essentially this is a RSI and fundamental screener. So I'm looking for bullish RSI divergence, and specifically, depending on my settings, I'm requiring that RSI, at least one of the pivot points in the RSI, to be an oversold RSI reading, meaning I'm getting bullish RSI divergence plus we're oversold. So it's already a confluence of signals that I like there. And then I'm coupling it with fundamentals, meaning there needs to be fundamental expansion for revenue and EPS. And so right now, today, I run this actually at the end of yesterday, usually in the morning based on yesterday's candles. So I'm running on the 52 week daily candles to see what's going on. Sometimes I'll go back even further if I need to. But Oracle got the highest score today. So immediately that becomes interesting to me. And then when I look at the chart, because this has been very beaten down, I start to look at the fundamentals. And the fundamentals are a little problematic. Oracle has a real AI cloud growth story and a massive backlog. So that's positive to me, but it also has a lot of leverage, Capex heavy profile, and it's not as clean as other mega cap software names. And the sentiment is split among those lines, really. Bulls see Oracle as an AI infrastructure winner, while bears are focusing on debt, free cash flow pressure, and whether the company is stretching its balance sheet too far. And today there was news that the S&P gave it a credit downgrade to BBB-, which doesn't kill the AI thesis, but it does make the financing risk harder to ignore. Although, like I said, UK government today designated 4 major global cloud services and technology providers as critical third parties, and Oracle was one of those. But if we look at the negative news, which is that credit downgrade on the S&P, Standard & Poor's gave it that credit downgrade. I didn't see it go lower on that. And when I start seeing negative news not drive the price down as much, that's better than positive news to me in general. It says that maybe we're getting close to the bottom. Plus, I'm seeing consolidation around here, and I'm starting to see some bullish RSI divergence when we have oversold readings on the RSI. That doesn't mean that we can't go lower, but the first thing I start to look at is on the weekly, what does lower actually look like? So if we zoom out on the weekly here, I can see that this previous bottom, which would be support around 120. So I start to calculate my risk based on that. And so I've done a few things today. I've sold some cash secured puts down at 120, but in fact, let me just go to a different portfolio that's holding that. I sold it for $10.45. It's basically flat to slightly down at the moment, which means that for a 120 put, I'm actually getting a cost basis of roughly $110. And I'm selling that quite far out. That's November. And so how many DTE do we have on that trade? We have 133 DTE. So what I'm saying is I don't know where we're going in the near term, but I am saying there's support down there. I'd like like $1,000 to hold that risk, because I do think we're going to have some type of rebound, at least just because of the RSI divergence. Now, that's a bet I'm willing to take, again, not financial advice. The other thing that I did was I also picked up a few call options because I was looking at the GEX, and 165 is looking like a reasonable place for us to break through. Plus, it's the upper bound of the daily super trend. So these lines tend to hold some weight to me in general. That's something I've back tested. I'm not going to get into that. Let me know if you guys want me to do a video on the super trend, because I really love using it for a lot of these purposes. Plus, you may have noticed all the way up there at 160, where we have the 20 simple moving average on the daily, we also had a pivot point. You usually don't hit those R3s without a big catalyst, but it was a known entity for today. And I think that we're just getting a little bit of suppression here, because there was a lot of news coming out, like I said, on Oracle. But I'm watching this very closely, and I do think that we could have some near-term bounce there. However, there is still a downside case, so not financial advice, manage your own risk. And the last thing I wanted to point out was this daily. So we have this trend line right here, and this is also drawn from my fib. I marked out the fib from this high to this low, and when you do that, you actually get a line there in general. And we've broken that very well right here. Plus, we didn't really have much structure this whole way down. I've talked about VWAP selling programs before. And if we zoom in on some of the intradays, you could just see they were crushing the VWAP every time it got below, just slammed it down the bid. And we didn't have an uptrend on the 1 hour for like 2 or 3 weeks here. We finally started to get one as we're basing. So I'm just seeing a lot of confluences that we're starting to form a base, not necessarily that we're going to rocket to the sky. However, all of this selling pressure are either participants who are now stepped out of the way, and so there's a liquidity vacuum there, a void, an air pocket for us, if you will, or these are aggressive shorts. And if that's the case, there are going to be people who are covering if we get some type of catalyst, specifically overnight catalyst. So I like this setup in general. I've got a few long calls that I've built out today with appropriate leverage. I've calculated how much leverage I'm getting for them and how far out they are. In fact, I'll just show you those right now. This is my short. I sold a cash secured put down there in this account. And then I have a few options for December. So a lot of time on those, 161 days. And, I'm funding this with that essentially. So it's overall bullish, but I'll be managing those closely. Again, not financial advice, just how I'm managing my own book. So that's the recap for today, and thank you so much for watching. If you found this helpful, please subscribe. It really means the world to me. I can't stress that enough. I make these videos for you guys during the trading hours instead of trading myself, because I've been trading for a very long time and I want to share some of that knowledge. And all I ask in return is a subscription or maybe a comment. I reply to all comments. Just let me know what tickers you want to see. As you can see, I do basically a grab bag from my portfolio for everybody. I respond to every single comment. And if you like planning out your trades like I do, like a quant does, check out alphaharmonic.io. It's a site I run for planning trades. And thanks so much for watching. Happy investing, and stay safe out there.